All right, guys, back to work. Break time is over. Hope you guys had a fantastic day. Hope you made some money out there today. It took them a little bit longer than we thought it would, but they finally got that nice big failed breakout off the high. I know a bunch of you guys made some money this afternoon, so well done on that. But it's time to get back to work tonight. As I always say, we're only as good as our next trading day. So Tuesday evening, we're getting ready for a very big Wednesday trading session. I have a lot of great trades on my radar for tomorrow. And as always, I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Wednesday. Before we jump in and get our hands dirty on these charts here tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And as always, I appreciate you guys tuning in. If you enjoyed the video tonight, do me a favor, will you? Hit that like button. Give me a shout out in the comment section below. Thank you so much for tuning in and supporting this channel. But enough of the intro, Joe. Wednesday is right around the corner. We get some really great trades setting up for what might be another really great day tomorrow morning in our trade room. Where are the best trades for tomorrow? Well, everything is bearish right now. S&P bearish, Nasdaq is bearish. A lot of momentum coming off those highs, right? Like I said earlier, it took them a little bit longer than we wanted to this morning, but they finally got that pop up, those beautiful failed breakouts we talked about in last night's video, and now the market rolling downhill, right, as we go lower. We want to sell pullbacks, right? We basically want to short the bounces right now, right? So shorten bounces, shorten bounces. Now, that's kind of the easy part. The hard part we have right now is we're sitting with a range above us on both the S&P and the Nasdaq and major support below us. Range above us acts the magnet. Support below us, of course, is major support. We got to be careful with picking the right entries for tomorrow. So we're going to cover tonight. I'm going to show you some really simple techniques to help you time the perfect entry to short these bounces here for tomorrow. So we're going to go into a lot more detail on the S&P and the Nasdaq. Oil is bullish here tonight. You'll notice we're pretty bullish here on oil after that rotation that we saw, we talked about in last night's video. But I'll tell you guys, there are 3 clues on this chart right now. In fact, you can see all 3 of them right in front of you right now. I'm going to talk about this more detail as we go deeper tonight, but there's 3 reasons why I would love to grab a crown reversal, a pop and grind reversal. I would love to short this thing back down on the oil. So if you're an oil trader like I am, you'll definitely want to stick around and watch this video all the way to the section of oil here tonight. Before we jump in and talk about all my favorite trades for tomorrow, let's double check the news schedule for tomorrow just so we all get on the same page here. Tomorrow is a brand new month. And as I talked about in last night's video, we do expect there to be an uptick in volatility as we transition into a brand new month. Tomorrow, March the 1st, there really is 3 things that you want to be aware of. First of all, as I mentioned in last night's video, we are going to be getting a barrage of CPI numbers coming out of Europe, right? We talked about France. We heard from France today. That came in much hotter than expected. Tomorrow morning, we're going to hear from Germany, right? Their CPI will come out. And of course, everyone's obsessed with inflation right now. So be aware of that happening in the pre-market for us here in the U.S. That may definitely shake things up a lot like they did here for us this morning. That's the first thing you want to keep on your radar. The second thing for tomorrow, of course, is the ISM Manufacturing Index. That is arguably the biggest news of the week. Combine that with the ISM services we'll hear later on Friday this week, but that is the big news arguably of the week this week. And then later on in the session, for all the oil traders out there, keep your eyes on that 10:30 time because you have the petroleum status report. What I try to do on Wednesdays is trade around that news number because it can really lead to some very whippy markets or whippy reaction on oil. So keep those 3 items on your radar, but let's get back to our charts. Now you know where the big catalysts are for tomorrow, but let's not forget, right? News is noise. We don't make our money off the news. We make our money off the charts. And guys, I'm going to go over each one of these charts right now and talk about my favorite trades for Wednesday. If you like making money, I would definitely make sure you watch the entire video tonight because every trade I talk about can be applied to your your favorite market, especially the S&P and the Nasdaq. Anything we talk about the S&P can be applied to the Nasdaq. The Nasdaq can be applied to the S&P and vice versa, and we'll tie it all together with the crude oil towards the end of this video. So don't go clicking off on me once we're done with your favorite market, because all these trades tonight can help you become a better trader and make more money no matter which one of these markets you're trading here. Now, we'll go S&P, we'll go Nasdaq, and we'll wrap things up on the oil here tonight. Couple things you want to be aware of. First of all, this is a tick chart, upper left-hand corner. This is an 8,000 tick chart tonight. I usually use a 10,000 tick chart, but this one fits better today because the volume was a bit lower. They'll all be tick charts, upper left-hand corner. This yellow line right there, that is the 21 EMA. 21 exponential moving average. And as always, don't forget, if you go in the description of the YouTube video, you'll find some higher time frame charts, some 60-minute charts, some 4-hour charts, which are a little bit of the context, the lens in which I'm looking at these markets right now. So if you want to get a bigger picture, look at the general context we're in right now, a lot of those 60-minute time frames and 4-hour charts are helping me identify where the best trades are going to be for tomorrow. So now you know kind of what you're looking at. What's the most important stuff going on this market right now? Well, first things first, we're pretty bearish overall. You can see this market, right, kind of rolling lower. What is one thing that stands out on this chart right now? It doesn't look like sellers are willing to sell low, right? It looks like they're shorting the pops, shorting the bounces, and, you know, let me talk about last night, right? Failed reversals, failed breakouts, bull traps. So we're definitely pretty bearish, but you can clearly see, though, that the sellers they're a little bit worried about selling too low right now. And I can understand why, because right below them, there's a major low here, this 39.47 half level. There's also a level like this on the Nasdaq as well. And again, when you go in the description and grab that 60-minute chart, you'll see why I say, right? That 47 level, it's a big low, right? It's a big low. So it's no surprise the bears are not quite interested in selling too low here right now. So we're bearish, and overall, I want to be shorting the pops, right? Shorten the pops. The most important thing right now is making sure we don't sell too low, right? I want to sell the bounces, short the pops. My favorite trade for tomorrow is going to be basically, again, pullbacks, right? Short at the top of this channel, short at the top of the bigger channel, right? As you'll see, there's a couple ways to do this, right? And we'll talk about different techniques we'll use on this, because these will require two different entry tactics. All right, and we'll talk about this more as we go here. I also think, too, there's a good chance here we may end up rolling lower here, and this is where we have to be careful. One of my favorite trade for tomorrow is if we do roll lower, getting that pop up and almost like a breakout pullback, right, and using the underbelly of the range for that short back down. Now, I like that trade a lot, right? Let them keep going lower, run into that major support, start adjusting these channels down, right, and look for that breakout pullback as we go. I also think there's money to make with a reversal off of that low, right? These double bottom reversals here. So there's definitely no shortage of ways to make money here on both the S&P and the Nasdaq. The Nasdaq is very, very similar, right? We're rotating off that high right now on the Nasdaq. I really don't want to sell down here because we're sitting at support. So again, I'd love to short some bounces, and if we do keep going lower, we got plenty of space in the Nasdaq, right, as to take out some of those big lows on the NQ. We're going to come back to the Nasdaq in a moment, so don't go do anything crazy over there. Stick with me here. So right now, I want to talk about if the market goes lower, because that seems to be the most likely scenario right now. It's tough to tell, but again, later on in the video, we'll talk about how to short this thing as it goes higher. There's a lot more variables as it goes higher because momentum comes into play. So here are the three things you want to think about if we do end up getting this market now going lower. While we're going lower, the best way to short this thing on the way down to that major low is going to be what's called a bull trap. We talk a lot about traps in the free trading course. We use these pretty much every day in our trade room. So on the way down to this area, we want to try selling as high as we can, right? And the only way to do that is a trap, right? Trap setups, again, same pattern you guys are learning in the free trading course. Now, once we get down to that low, then like I mentioned earlier, I'd love to see those bears take their profit, get that bounce up off that low and start going, okay, I've got new channel coming down, right? I've got obviously prior support turns into resistance. I've got channel coming down here. So there's a lot of reasons to like that breakout pullback. One of my favorite trades here for tomorrow is get back above that 21 moving average, okay? Get some buyers coming in, see if they get caught trying to buy this. Horrible place to be a buyer, right? Bear market, resistance, right? Okay, so horrible place to be a buyer. Hopefully buyers are not watching my video right now. Hopefully they walk right into a bull trap and we can use one of my failure patterns, right? And sell off the high of that channel. This could easily be a failure into pullback combination as we go back down to retest the low, right? So think about this sequence, right? And again, these are straight out of my free trading course. So again, it's a bull trap, right? Bull trap entry above the high. It's a buyer failure entry above the moving average, okay? And then again, it's the pullback entry as we roll back over and retest the low. Trap on the way down, failure on the deep pullback, on the bounce, right? And then a little pullback entry as we go back to that low, just like you guys are learning in the free trading course, which reminds me, I know that most of you guys and gals have taken that free class, but listen, if you're here for the first time right now, if you haven't learned these simple entry tactics, you definitely want to take that free course. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy that you'll learn in that free class, that video series, will teach you a stupidly simple trick to within the first 5 minutes, you'll know exactly where the best trades are going to be that day. And I'll teach you 4 simple entry patterns, like failures, like traps, like pullback combos, to help you get started making money on your account right now. It is perfect for someone trying to make the jump into full-time trading. If you hate missing winning trades, if you're not getting the results you want right now, grab that link, take that free course. And in that free class, you'll learn all about things like shallow pullback traps, right? Deep pullback failures, failure into pullback combination, how to draw these channels. You'll learn all of these smaller details there. So I like that scenario as we're going lower. I would also say too that we may end up kind of popping and bleeding down, if that happens, nothing changes, right? Nothing changes. Just simply draw the channel off these lows, bring it up around that high. It'll be a hell of a lot of bear momentum. Wait for that. Now, if we do pop down and grind down like this, again, I don't want to sell low down here, right? I want to sell relatively high. So the goal is we don't short into those lows. We wait for ultimately bears to stop selling, buyers now creep into the market. We wait for that pop up. Remember, some of the best entries will usually come just a little bit above some prior swings, right? So as we start to kind of grind down, think about where those prior swings are. Draw that channel tight off of that low, up around those highs. And then I always like to go for traps, right? Above those prior swings, get above the moving average, get the buyers roped in, something like this, right? Where they pop up, buyers try, they fail, back down. Those are easy ways to make money in a bear market, right? Getting above the moving average, up around the high of that channel, and you're simply looking for their stops, right? You're using their stops as fuel for that failure, and then on the way down, right, is that pullback combination. Now, I mentioned earlier that we can definitely buy off of that low, but how would you buy off that low? You have to be careful, right? Because we're very bearish. Now, think about this. Professional sellers, experienced traders, the traders who actually move these markets around, right? They're the ones selling high. Who would be selling down here? Rookie traders. inexperienced traders. This is where there's money to make in reversals. Okay, we call these double bottom reversals. Very, very simple. Once we go back and retest a low, while all the smart money who sold high are now taking profit, now in come the rookies, right? The brand new folks who all they do is chase the market around. I know we've all been there before. Hopefully you're no longer in that category anymore watching my videos. But now all the rookies come in, right? Oh, we're bearish. Let's sell. No, right? Horrible spot to be selling. Think about where their stops are, and what you want to do is you want to wait for those bears to come in, the rookie sellers, and literally dig their own grave, right? And once they dig that grave deep enough, 2 tries there now, right? Remember, let them get short a couple times, because you need those stops to be fuel, and that's the way you grab those reversals. Now, where do you think that reversal might go? It may end up popping up. Well, it's going to want to go back to retest this high, right there, right? That is where the market wants to go. Okay, so what we'll do is we'll look for that reversal off the low. And guys, oftentimes what happens is you get these moves lower, they end up rolling lower, right? You get that pop up. Again, you trap in those buyers above the moving average, right? Channel coming down, yada, 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 right? You trap the buyers in, you short that sucker back down to retest the low. They take out that low. The bears get caught chasing. They get stopped out, right? We squeeze back up. We take out this high right here, and now we begin to create a range. Okay? Does that make sense? Right? It's a bear market now into a range. What did we talk about last night? 24 hours ago, we anticipated a range here, right? We talked about the fact it smelled like a range, and it certainly was. What was the best trade today with that bear market range? It was what? It was a buyer failure. So as we go up, right, we wait to get above the highs. We trap in some more buyers up here. This is easy money right here, right? 1, 2, let them get long. They're thinking this thing's reversing. They're thinking double bottom reversal. No. Bear market. Let those buyers wrap that noose around their neck and short that sucker right back down again. That range, again, that range is what usually develops once we get that double bottom reversal off of that low. All right. So this is the sequence I'm watching as if we end up going lower here on the S&P. Now, the next question obviously is what if we go higher? You know, like I said earlier, I think the easier trade here right now is if we go lower, because then it's just a matter of shorting the bounces, right? It's not that complicated. What's more difficult here is if we go higher. And the Nasdaq's a really good example of where this can become a little more difficult. Now, why do I say that? Why is it more difficult? Because the range comes into play. Okay, momentum comes into play here. Okay, let's talk about this. Now, again, the Nasdaq is almost identical here as far as the game plan goes, going lower, right? If we do end up going lower here, we have all of that momentum. And by the way, was that not just a picture perfect? We talked about this last night, right? That get above the high, that 1, 2, trap back down. I mean, come on. If you watched last night's video, I hope a bunch of you guys took a big paycheck out of that failed breakout, that failed reversal that we talked about last night. Anyways, as we roll down, right, this is a hell of a bear market. It's a very strong momentum. So if we do keep going lower, remember, the aggressive sellers here are going to be looking for bull traps, right? Because they're not trying to sell. They don't want to sell very low. Right? So as we're going higher, it's bull traps, right? We're getting above those prior swings, just like we talk about in the free trading course. Now, and then again, as we go lower, eventually we take out some of these big levels. We end up popping up, right? This becomes, of course, a bigger channel, and we start looking for those buyer failures, back down again, same basic idea, right? Same basic idea we just talked about on the S&P. I'm not going to go back over all that again, but again, what talk about the S&P can directly be applied here to NASDAQ. Now, I mentioned earlier, I mean, when you think about it, there are really 3 areas where we want to be thinking about shorting this thing as it goes higher. One is the top of this channel. Okay, that is by far the most aggressive. However, with all that momentum coming off the high, it's very, very doable in an overall bear market. The next one is off the pendulum swing or the triangle, right? This triangle you can see here coming out of here. You'll notice that triangle, right? So you got to think this thing could easily rip up and collapse right back down again because of this triangle. That's the second area. The third area, which seems a bit unrealistic right now, would be a retest of that high. high, right? That would kind of be it would be kind of the dream come true right now for the buyers in what is a very heavy market we've seen over the past couple days. So each one of those three locations requires a slightly different entry tactic. You want to go over those right now? All right, let's talk about the first one. The first one is a shallow pullback. Now, what's my concern right now on a shallow pullback? I'm selling relatively low. So how do we avoid selling relatively low? We talked about this a moment ago. And if you're taking my free trading course, you know this already. If you're concerned about selling low, you want to sell as high as you can. And what entry setup is the best way to sell high? A trap, right? Traps are always the best way to sell high. In this example, what we want to do is let those buyers come in, try once, try twice, and get that little trap entry on the short. Okay, you can definitely sell this. It's a nice channel we have going on right here. It's not a horrible spot to sell short. The problem is, because again, a lot of momentum, right? A lot of momentum rolling over off the high. I wouldn't be surprised if we get a nice juicy bull trap. It's technically a two-try failure, right? A failure pattern, right? Into a trap entry. The trap entry technically is the most important part because of location. Right? It's because we're selling relatively low. Now, we can take that out of the equation if we get the run going higher. Okay. The second type of pullback here is the much larger one. Now, this one has its challenges because it will also have some pretty good momentum, right? Momentum would be pretty good on this. So we're going to still want to get those two tries, right? But we're not going to need a trap entry. It'll be just like this one. Right? We don't need that trap now. It'd be great to get a trap. Don't get me wrong, right? A trap entry off this high, basically, again, it's a failure pattern that's kicked up a little bit, right? It's a two-try failure because of the momentum shift off the low. Again, resistance, right? Resistance levels above the range. Ranges act like magnets, right? Okay, that's why we're looking to short this thing off the high. Okay, again, strong momentum push higher here. The buyers try a couple times. I love the idea of the trap, but we may not get it. You know, all we might get is the push up, the buyers once, the buyers twice, and just what we saw this afternoon, right? That gorgeous two-try failure back down into that trading range. Now, you want to think about this because as we go higher here, if we go higher here and trap in some of these buyers, 1, 2, now think about where stops are. And all you're doing is literally selling into their stops. You're using their stops as fuel. Now, the goal with this would be is to get back to the other side of that range and then take out these big lows, right? If we're lucky tomorrow, the market will roll over and then give us a follow-up trade off the high of a channel. This is always kind of the cherry on top of these reversals. We don't get them all the time, right? Like today, right? This afternoon, we simply didn't get it, right? But sometimes you'll get lucky. You'll go up into resistance, trap in those buyers, use those stops as fuel, right? And then as we roll over, this could be a bull trap. It could be a buyer failure pattern, right? Same stuff you guys are learning in the free classes, all right? So bull trap, buyer failure, pullback combination. Just remember, though, you want that secondary entry. You want that ideally before we take out the other side of that trading range. You want to be selling it as we're going into the range, not after we're already in the range, right? Just be aware of that. Now, the third scenario, as we go higher, this is where we completely reverse, right? And now we're taking out that high of day now. This is an extreme reversal. This is a lot of momentum for the buyers. At this point, it'll be assumed that buyers would have gone above the 21 moving average. They would have held that pullback and jumped, right? This is much different than we saw earlier today, right? Earlier today, we didn't have that big rotation off the low, right? Today, it was a bear market into a range. They popped up. You can be pretty aggressive like that. But when we reverse from way below that low all the way back up, this is going to be a very, very bull market. And because of that, and this is again why each one of these entries requires a slightly different tactic. Well, if we can find our way by miracle, it seems right now, but who knows what's going to happen tomorrow with that ISM number. If we end up all the way back to this high, lot of momentum for the bulls. Again, we're still an overall bear market, so I'm interested in selling up here, but now I have to break out either a crown reversal pattern or have to break out a double top reversal. So crown reversals are pretty simple. They're 2 try failures with a trap high. Remember, a lot of momentum now. Anytime we see this much momentum, right, coming from below the low, remember, not the same situation we saw earlier this afternoon. If they rotate off that low now, there's a very good chance they're going to pull back and retest that high. We have to respect those buyers, give them the benefit of the doubt, and let them try once, pull it back, let them try twice, and before that retest, we look for that crown reversal. Okay, this is the safest way to short something like this, right? At resistance, but again, a lot of momentum there for the bulls. Okay, now if we get lucky, right? Well, maybe not lucky, but one variation of this is sometimes it will pop and grind back down. Okay, you'll get these V tops, right? If that happens, new channel, off that low, off that high, go looking left, mark those prior swings, and don't miss that first test. Okay, sometimes these things get up here, and there's so many bears up there because, again, we're such a bear market overall, we don't get like a 1, 2, and come back down. Sometimes it's simply V-tops up there, and when it kind of V-tops like that off the high and begins to grind down, the grinder is the giveaway. Once it grinds down, I know it's kind of complicated, but you draw that trend line off that low, bring it up around that high, and you do not want to miss that first test. Right? I like traps. Traps are my bread and butter in our trade room, right? Love traps. It could be a trap. It could be a failure. It could be a pullback combo, but you want to get in off that first test of that new channel. Okay? The final one you want to think about, which is oftentimes the easiest one, it takes some patience though, is if we do go all the way up here now and they can manage to pull back and retest the high, now it's mission accomplished, right? Now all the pros, right? We assume the pros are buying relatively low. Now in come the rookie traders buying high. We talked about this to buy a double bottom earlier in this video, right? This is the exact same idea here. So again, very strong move up. They may pull it right back and retest the high. Once they retest the high, now that momentum is absorbed, right? Now the buyers who we have to expect to buy that pullback, okay, now they're taking their profit at the high. Now in come the rookies, 1 and 2. Now remember, you want to try 2 tries in this, in my eyes, because again, we're still pretty bullish in the short term. Remember, the two most important things to make money every day is you have to understand context and you have to understand momentum. Okay, when you understand context, right? Context is the situation you're in. Right now, we're at the top of a range in an overall bear market. Okay, that's the context. The context describes to us where the best trades are going to be. Then the next thing is to time the perfect entry, you have to incorporate momentum. In this situation, the situation says it's a great place to sell short. But the momentum says, be careful, right? It's a lot of momentum coming off that low. It's much better to let the buyers dig their grave here, wrap that proverbial noose around their neck, and then use their stops, right? Because that becomes the fuel. You know what I mean? We need some, remember, with all that bull momentum, we need some sort of catalyst to turn this thing around, and that's where stops as fuel come into play, right? So here we go now. Now the buyers are trapped in. Great spot to sell short. The buyers are showing signs of exhaustion, 2 tries of the highs, and now we get that short back off that high, and then we've got them. Now momentum turns over, right? Now context is bearish, momentum is bearish, and now we go and like I said earlier, you don't want to miss that first test, right? That first test, this is a trade you can get very aggressive with. Stay patient, picking a top in this example, right? But do not hesitate on that first try, because now it's rolled over. Now the buyers have become sellers. The sellers are sellers now. Everyone's looking for that short back down again. And again, where do they want to go? They want to go back to the side of that range. They want to take out the side of that low. These can lead to some very, very big winning trades on the opposite side here. All right, guys. So again, like I said earlier, there are 3 ways to do this, right? One right here, and one right here. And as you can see, All three of them are great potential, but you can see though, context, momentum, it all requires a slightly different technique if you want to do it, in my eyes, the right way, the reliable way, the consistently profitable way. All right, so now we know how to make money on this going lower, and we know how to make money on this stuff going higher here. Now we wait and see what happens overnight, and the game plan is ready for tomorrow. Last but not least here, let's wrap things up here tonight on the oil. Oil is a bull market right now. But we've got, as you can see here right now, we are 3 legs up, right? We're 1, 2, 3, and I would encourage you, again, in the description, there's a 60-minute time frame down there, and you'll see, you'll see, we basically made this big move down in the 60-minute, and now we've got this beautiful 3-legged kind of contained correction running right into some big resistance. I'd love to get a short, right, going right back down to retest it. So I got my eyes on the short. I like this little 3-legged correction right now. We're sitting at some pretty significant support resistance here overhead. Let's back up. What were the 2 things that I said, right? Context and momentum. Okay, so what is the context right now? The context says we're in a pretty darn good area to sell short, right? Major resistance. We're 3 legs up in an overall bear market right now. Context is great, but how is momentum? Momentum is not that great for the bears, right? It isn't. Look at the strength of this move. It's a very strong move here. So what were some techniques we just talked about on this? I mean, you can literally just apply what I just talked about on the NASDAQ a few moments ago, this chart right here in front of us. You can see that crown reversal right away, can't you? You can easily see it. So to short this thing, I don't like to pick tops, right? I'm not a big fan of picking tops or picking bottoms because oftentimes it'll race up, it'll keep on going. Right? What I'll do is I'll wait for these buyers to try once, let them try twice. You'll notice what I'm doing here. I'm drawing in that channel off the low, and I'm projecting it here now off the high. You draw them first off of these lows. Now think about this. The buyers have tried once to go higher. What are the buyers going to do? The buyers are trying to retest that big high. Right? Because anytime we see a strong move in one direction, we expect to pull back in a retest, right? So we're expecting that retest. The buyers want the retest. I'm assuming now they'll try a second time here. If they try a second time now where are stops? They're right below those lows. If I can get a nice strong signal closing below the moving average off top of that channel, or even better, a trap high above that high. And we talk a lot about signal candles in the free trading course, right? But if I can get those right, again, bull trap, crown reversal, it's basically a 2-try failure for that move back down, right? That's my goal here, or my favorite trade on the oil. Now, like I mentioned on the NASDAQ, sometimes what happens is the market ends up rolling over, right? Kind of rolls over and begins to kind of grind down like this. That's fine too. I have to simply adjust my channel. So now mark that channel down off the lows now, bring it up around those highs, and as I always say, right? Look left, find some prior swings. Swings are where traps live. Get above the moving average, get some buyer failures, look for shorts into stops, right, for buyer failures. And again, we're trying to take out some of these big lows down here, right? Retesting these big lows. So I like that. I like that reversal criteria here on the crude oil. Heck, we might actually pull back and retest the high. And once they retest the high, mission accomplished. Then what do? We rope in those buyers. 1, 2, use the stops as fuel, and we're looking for that double top reversal back down again. So these are the same patterns we walk through there on the NASDAQ. The hardest part I have right now about oil is as we go higher, and you'll see this on the 60-minute time frame I posted in the description, I'm really not that confident in the breakout going higher. I would like to still look for crown reversals if it breaks out higher, V-tops, right? V-tops or pop and grind reversals going lower here. So even if they do get a pretty convincing break going higher, I'm quite skeptical of this area here. There's quite a bit of resistance coming down overhead on that 60-minute time frame. So I'll believe these buyers when I see it if they can hold that pullback, and we'll get back after it tomorrow if we get the pullback to hold up there. Again, the most important thing though right now is if we do end up rolling over, just keep looking for those bigger channels and grab grab those shorts right off the top of those channels and keep your eyes on these big lows down here, because that's in all reality where the market wants to go next. So I like that reversal. I love the fact that we're seeing this thing up into that 1, 2, 3 into major resistance. The buyers have tried once. Will they try a second time? Can we get that channel, or even better, get that bull trap signal, right, for that short back down again? That's where my mind's at right now on the crude oil. What do you think? What do you think? Oh, and don't forget too, tomorrow is a smaller window of opportunity here on oil because we have that 10:30 news. So get to those trades earlier than later. I would love to know, by the way, what your thoughts are on any of these markets. Hit me up in the comment section below. But the game plan is ready for tomorrow. A lot of great trades we're tracking here on the Nasdaq and the S&P. So we'll wrap things up. We'll get a good night's sleep. We'll see how the overnight German CPI comes out tomorrow. And again, we get some big news tomorrow at 10 o'clock Eastern time. Don't forget, guys, I'm going to put all the membership links, all the free course links, all the additional chart time frame links all in the description of the YouTube video. So grab those, enjoy that stuff. If you need any help with anything we talked about today, the easiest way to get help, to get access to our free trading classes or our membership courses or a trade room each morning, is to call the office, send us an email, or use live chat. We're always here to help out. All right, guys, hope you enjoyed the video tonight. Thank you so much for sticking around all the way to the end. Hope you learned a bunch. Hope you earn a bunch tomorrow as well. And hopefully I'll see you sometime soon in our trade room, opening up tomorrow morning, every morning at 8 o'clock Eastern time. Guys and gals, I'm out of here for now. My name is Joseph. As always, be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.